Exercise 314 gives us an unadjusted trial balance as of December 31st, 2018, and then it gives us some additional information, some of which we may need to make an adjustment to that trial balance. So let's take a look at the year-end entries and see what they are. So a balance of prepaid rent of $7,200 represents payment on October 31st for rent from November to April. So we got this rent on October 31st and it goes right through April, so that's, and you can't see this, but I'm counting on my fingers, November, December, January, February, March, and April. So that's 6 months. So we have to take $7,200 divide by 6. We come up with $1,200 per month. This is 2 months rent because it's year end. So what we need to do is we need to reduce our prepaid rent and increase our rent expense. 2 months, $1,200 times 2. Debit our rent expense, $2,400. Credit our prepaid rent, $2,400. Now we have some deferred revenue here from advance payments, some unearned revenue. And we started with $3,000. That was how we started. And at the end of the year, we have provided $750. So there's $2,250 left, but they don't really care about that. They want us to just handle this piece. So we're going to debit deferred revenue, $750, the amount they gave us, and credit the revenue for $750. Then in item C, they tell us an additional $700 in salaries is owed to employees at the end of the year, but will not be paid until next year. So we need to recognize that salary expense this year, but it's going to be paid next year. So the salary expense for this year is $700, the number they gave us, and we're going to pay it next year, so it's a salaries payable. Now, when we pay that next year, then we will credit cash and debit salaries payable. And the last thing they ask us to take a look at is the supplies. And it says the balance of supplies represents the amount of office supplies at the end of the year. $1,700 plus an additional $3,200 were purchased, and only $800 of supplies remain. So that's going to best be done by working out a T account. Let me find a chunk over here and let's figure out what they're telling us here. So they tell us that the balance of supplies is $4,000. So that says the answer over here is $4,000. Now that represents the amount of supplies that were on hand at the beginning of the year, plus an additional $2,300 purchased throughout. By the end of the year, only $800 worth of supplies remains. So that $4,000 I got is the beginning of the year. So the balance of $4,000 represents the amount of supplies on hand at the beginning of the year, plus we bought $1,700, plus an additional $2,300. So they're telling us That's how much we purchased throughout the year. And that's that total. And at the end of the year, they have $800 left. So they gave us a lot of information, but let me show you, let's break that down to the simplest. Cutting out all the bull. Supplies was $4,000. At the end of the year, it was $800. How much did we use? That's breaking through and digging through all their accounting babble, and the answer is $3,200. So we have a debit of $3,200 to supply expense and a credit to supplies of $3,200. What made that difficult was the way they gave you all of this nonsense information.